Good morning. I hope you're doing amazingly well today. This video is talking about replacements, the basics of if you should replace someone's policy, should you proceed, or maybe should you pack your bags and head the other direction. It's so important to do right by your consumers, and sometimes insurance agents don't understand the basics of replacement work when you're dealing with life insurance or even Medicare or annuity work for that matter. So I'm going to help you understand the real basic concepts of replacement so that you can hopefully really place your clients in a better position. And it really comes down to this. The first thing you need to consider with any form of replacement is, am I making this prospect's life better than when I found them? If you want to do replacements right, you just want to think about, am I really putting the client in a better position than when I first found them? This is foundational to you in replacement work. If you make the client's lives better, then you as an insurance agent deserve to get paid more, deserve to get the business because you placed the needs of your client before your own. Always view replacement work with the lenses of this. Would I do this to my own mom, my friend, my cousin, my own best buddy? If that's the case, and you can answer that, yes, I would do this to my own family. I would replace this if it was my own best friend that I see every day. I absolutely would do that. Then that's a determining factor. That's good. If you would do this with your family, your friends, you're on the right path. But I've seen this time and time again where some agents will replace business just to get paid. And that's a poor decision because you're placing the client in a worse position. For example, same exact death benefit and the client pays more money. What? So they have the customer service by you, wink, wink. I've seen insurance agents do this specifically in captive insurance agencies where they're not brokers. They can't sell other products. So what they'll do sometimes is go, oh, you need to buy your Medicare insurance with me. You need to buy your life insurance with me because I'm the local guy and I'll take care of you. And that agent's barely been in the business and realistically probably won't make it long term. But sometimes clients are sold this bill of goods. They get got. The family now gets maybe less benefit, death benefit wise, or maybe gets the same death benefit, but now they're paying for more than they ever should. So always just think about it. Am I putting the client in a more advantageous position than when I found him, or am I going the opposite direction? If you're helping the client gain the advantage, keep going and talk about replacement work. Replacements are easy because sometimes there's companies out there that maybe end in a penny. There's other companies out there that maybe are on TV selling that guaranteed issue life insurance stuff. And you as a broker can just be a better solution for them. You can give that client maybe day one coverage instead of that consumer having to wait 2 or 3 years before they get a real decent death benefit. That's a good reason to replace and take care of them. And even if it costs a couple bucks more, if the death benefit is first day full coverage, that's a reason to sell them a policy over them waiting 2 or 3 years, because the consequence of that client dying 23 months deep and just getting their money back plus maybe some pocket change is a really poor reason to stay with a company that they bought off TV that was guaranteed issue or bought in their mailbox. So if you can take a client from a graded policy to a better policy that's day one coverage for maybe a buck or two more, that's fine if it's day one, because you're delivering the bigger check to that family when they die. And if they died early, this is powerful to consider. Always think about, am I putting this client's needs ahead of my own? Now, another good reason to consider replacing life insurance is if I can give that client more death benefit for less money. And there's a lot of companies out there, end in life, okay, may rhyme with a penny, and they could have sold a policy a couple years ago. I can come in with a better life insurance company with bigger death benefit for way less money a month. That's powerful. The better that you can place that client in a new policy, if you can save them money and give them more death benefit, or save them money and give them the same death benefit, this is an advantageous position to the consumer. Now, some things that you want to consider when you're doing replacement is what's called contestability. Every life insurance policy has contestability, meaning that the first 2 years of ownership of this new policy, the company, if they die prematurely, can look into it, such as the suicide clause. There's a suicide clause for 2 years with every life insurance policy. If they commit suicide in the first 2 years, the company can says, oh, we're not going to pay anything but your money back plus pocket change, because that is something that maybe they planned for. The company has that caveat to kind of get out of it in a lot of cases if suicide was committed in the first 2 years. So if a consumer's owned a policy for more than 24 months, you want to make sure you fully disclose that to them in the replacement paperwork. What are some negatives of this replacement? 2-year contestability and 2-year suicide clause. I put that in the replacement work when I sell life insurance and I do replacements, because the client needs to understand that if they commit suicide in the first 2 years, this new policy has that 2-year contestability. If that client is trying to lie to me on the application about their health, the company has a legal right in the first 2 years to contest the claim and look at all their medical records, and the company won't send out the money to the family if they lied on the application. So if somebody had a policy that they bought over 2 years ago, you always want to make sure that that application is super clean, because contestability is a real thing, and you want to prepare the client in the best way possible so that the family, the loved ones, don't have any pain points down the road. So just because there's a 2-year contestability on your new policy doesn't mean you shouldn't place it, but it's always something to consider in your analysis of how you're going to help that consumer. So always think about the replacement as, would I do it to my mom? Would I do it to my grandma? If you're still getting that good feeling about doing it and you're not blowing commission breath, you should probably keep helping that consumer, keep walking with them, help them get a better policy, help them get a better placement, and you will be in a better place as an agent because you can increase AP when you do this. Increasing AP, instead of, let's say they got $5,000 now and then you sell them another $5,000. Sometimes you can sell them $10,000 in totality for less than if you just stacked policies. Hope this saves you a lot of heartache and pain. I appreciate you watching, and any topics that you'd like me to bring to your attention, put them in the comments. I'll help in any way I can. I appreciate you. We'll see you soon.